today we're going to be talking on financial field trip to the bank. So yeah, let's get started. Initial exercise. Take your child to the bank. Point out the tellers and the customer assistant people sitting at the desks. If the bank is not busy, ask the child and ask how much interest the bank is paying on Monday deposited in the bank. Include saving accounts, certificates, and deposit of certificate of deposit and other bank instruments available through the bank. Have your child take notes. Then have your child ask how much interest the bank would charge for a car or a loan, house loan, or a customer credit loan. If the bank issues its own credit card, have your child to ask for the interest rate on the card outstanding balances. Then leave the bank and go somewhere quiet to complete the following table. Bank pays interest to you at saving account, blank percent, money market account, blank percent, CD, blank percent, and I don't know, so like with Rich Dad Smart Kid. So like, you know, like, I don't know if you can write on it, but intruder, yeah. And ask your child to review the table, then ask the following questions. Oh yeah, and it's just like that. So, you pay interest to the bank at car loan blank percentage. It's pretty obviously that's percent, like, you know, consumer loan, credit card, mortgage, and some NTCing. Ask your child to review the table and then ask the following questions. Which column shows the higher rates? Blank. Complete the following sentence. So the bank pays me interest of. And also, like, you can go write this on paper. Like, if you have the book, it would just be easier because you have to, like, you're just only, like, gonna copy it. And if you're thinking of cutting it out, I don't know who would actually think of cutting it out. That's just weird, you know? And also, I want to introduce to join his video. I am gonna, wow, introduce just starting down too loudly. And yeah, let's keep going. So the bank pays me interest of saving account rate on my savings account, but when I want to borrow money for a car, I will have to pay the bank car loan rate. For the money I borrow, I will be paying car loan rate minus saving account rate more than I am receiving. Next page. I actually want to look at this sentence. Okay, yeah, let's move to the next one. It's number 3. Oh, okay, that's your church movies. Okay, so that's number 1 and 2. Okay, that's number 1 and 2. Number 1 is which column shows the higher rates? Blank. Yeah, I already said it's just like you might not know where to go back in the video. And number 2, complete the following sentence. Is that sentence I just said seconds ago? Not seconds ago. Now number 3. Now review chapter 10. Why savers are losers with your child. Explain that it is always wise to have some money in a savings account. And also, like, savings account, like, you don't want to put all your money in the savings account, or else your business, like, if you're trying to get stuff to help your business and your business, yeah, it's just like talking about so, like, because then, like, if your business, like, not regularly at, like, obviously you'll have to pay for some stuff, so, like, you don't want to save like, you don't want to save a lot. And obviously, we're not just going to save all our money in one thing without paying anything. I mean, like, you need to go get groceries, and you need to, like, help pay your business. It's like, obviously, we're not going to save always, but, like, I don't know if I need to save, I don't know. What is it? Oh, okay. Savings account and that is how we start learning good money habits. In fact, it is recommended that people keep enough cash in their account to cover from 3 to 12 months worth of expenses in case of an emergency. We are not recommending that you rush out and withdraw the money you have in saving accounts. We are saying that saving accounts are not good investment vehicles. In summary, ask your child, if you had the following situation, would you be making money or losing money? So actually, I need to see what the situation. I'm pretty sure it's about number 4, in number 3. So I don't know. I'm just gonna say this because I want to say it. I'm not like this is not a part of it. I just want to say it. But like if you're in your business and like you're buying a liability, you know you're not gonna be getting any money from it. But if you're buying an asset, then you're gonna be getting money from it. So yeah, there are just these kind of questions and just answers at the bottom. But I will not tell you because if you have to book, then yeah, if you have to book, then you'll probably already went over this because it's page 256 in Rich Kids Market. Yeah. So. Questions. Well, not really actually questions, just like you don't have to like fill it in or anything, you know what I mean? And also like just like percent thingies, it's like I won't actually know anything, but I kind of read it. Should last about, what time is it? Let's just get this clock right there. I don't know when it will end. I don't know. I think it's probably 11, so yeah, let's get moving fast, because it says the battery will last at 12, so I might have to make a part 2. I don't know if I have to make a part 2, but let's just go. You have 10,000 in the savings account earned by 4% interest. How much interest would you be earning per year? 10,000 times 4 equals blank A. That's question A, okay. And you have 10,000 consumer loan on which you make only interest payments for the first year at the rate of 9%. How much interest would you be paying? Basically the same thing, but instead it's 10,000 times 9,000 equals blank B. The other ones are like blank C and blank D and blank E. Yeah, those are type of questions. Now, after 1 year, are you making money or losing money? A minus B equal, just blank C. After 10 years, how much money have you made or lost? C times 10 years equals blank D. And I'll wait 5 seconds because I don't want to waste any batteries. Because when I'm recording, I'm pretty sure we're losing a lot of battery. So, I'm gonna wait only 5 seconds. You can pause it and think about that. Yeah. Okay, so yeah, it's been 5 seconds. Probably went definitely too fast. Man, here's the answer key. A equal 400. The bank will have paid you 400 interest on your savings. And also, sorry if I go too fast because the battery, it said it will last until 12, and it says March 26th. I'm pretty sure. It's Wednesday, May. It's Wednesday, May, like after summer, like after the 25th. 25th is Tuesday, so Tuesday and today's Wednesday, so it's the 26th. In May 2021. So I don't know what time it is. Yeah, I don't know. Number B, 9 equals 900. You'll have to pay the bank 900 interest on your loan. Number C, losing 500 or minus 5 or minus 500, you have lost 500. I think you can slow this down because I'm talking pretty fast or I'm just like, if there's captions, I don't know if there's captions. Go to the captions. D, losing 5,000 after 10 years, you will have lost 5,000. You will still have 10,000 in savings, and you will have a consumer loan of 10,000. But you have paid 5,000 more in interest than you received over the 10 years. So there's like this page and on this page. So if I go fast, sorry. Advanced exercise. Review the facts above, but let's add the impact of income taxes and the situation. The government taxes on an interest income but does not allow you to a dedication for the interest you pay. As the question thing is, I don't know. Start with the net amount you calculated for C above. Remember, it may be a negative number. C equals blank. Take the amount of your interest earning from number A. A equals blank. Multiply it by an income tax rate will vary based PARY based on your total income. A times 50% equal blank number blank E. Now subtract E from C to determine the amount of money you made or lost after taxes. So I'm assuming E is smaller than C because it said minus it's from C. I'm subtracting. After 10 years, how much money have you made or lost? F times 10 years equals blank G. I don't know where F is actually. Yeah. Oh, C minus E equals blank F. Okay. Okay, sorry. And E equals 200 money bucks. You will pay 200 money bucks in income taxes on the interest you earned from the bank, assuming a tax rate of 50%. F, losing 700 money bucks or minus 700 money bucks. For the income tax effect, you will be losing 700 money bucks per year, or paying 700 money bucks more in interest on your consumer loan than you receive on your savings after taxes. After losing $7,000 after 10 years, you will have lost 7,000 money bucks. You will still have 10,000 money bucks in saving, and you will have a consumer loan of 10,000 money bucks. But you have paid 7,000 money bucks more in interest taxes than you have received over the 10 years in interest on your savings. In review, a quick review would show that the example above this would not be wise in investment plan. Unfortunately, many people follow this split plan without realizing it. Here are some ideas to improve this investment plan. Easy. Use your 10,000 saving Use your 10,000 savings to pay off your 10,000 consumer loan. This way, you won't lose any more money. You will earn this interest and pay no interest. Average. Find an asset to buy with the 10,000 in your saving account that will generate enough cash to flow to pay for your customer loan. You will need to find an investment that generates a cash flow of 900 money bucks per year. And another way to look at this, that is your cash 900 money bucks on cash 10,000 money bucks return is essential for any investor. This way, your asset pays for your liability, the consumer loan. The impact of income taxes is not included in this very example since the income tax applies to APPLICABLE to the assets you may buy may vary. I don't know, it's the VARY. Complex. Buy the asset with the cash on return of the least 9%. Then determine how you can convert the 10,000 money bucks consumer loan into a business loan. This will make the 900 money bucks of interest paid on the loan deductible for income tax purposes. This idea is covered in more depth than Rich Dad's Guide to Investing. Please remember that this exercise is intended to demonstrate the difference between saving and borrowing, as well as the difference between saving and investing. Additional components have been added to introduce higher levels of complexity. Start employing the initial example to your child and continue only if your child is interested and shows a true understanding of the initial concepts. So yeah, that's it. Like, subscribe by no gun because you're worried if it's near 12. So yeah, like and subscribe. Bye. And also go check it the book and saying to actually understand. So yeah, bye.